Hello and welcome to today's webinar. Appreciate everyone taking the time to join and go over this great topic. So I also want to let everyone know that we will be doing another webinar next week going over tenancy in common. So please ask your questions in the chat and we'll go over them live here in person. Okay, so let's get started. So today's topic is going to be to go over self-directed solo 401k for real estate investing using an LLC. It's a very common question that comes up a lot, and so we're going to go through some of the good details here. Okay, so we've got different steps that we're going to review in terms of using your solo 401k funds in real estate using a single member LLC. But we offer the solo 401k LLC for real estate investing. So one thing to note here is that you don't need, that's actually a common point of confusion, is you don't need to have an LLC to invest in real estate with checkbook control. So when you have a solo 401k, a lot of people just buy the property directly in the name of the solo 401k. They have a bank account in the name of the solo 401k or a brokerage account that gives them checkbook control. So that's the important note here is it's not needed, but it is something that does come up on a regular basis. And so we want to take some time to go through it. So again, the first point here, just to hammer it home, is that the LLC is not required. The real estate investment can be placed directly in the name of the solo 401k, so it's going to be titled in the name of the solo 401k. In fact, most solo 401k owners don't use an LLC, in our experience, to invest in real estate. If you are going to use an LLC, the way that it's done is to have a single member LLC. So the member of the LLC is the 401k. The individual would be the manager, so that would give them the ability to direct the LLC investments. So, as a single member LLC, that's going to be a disregarded entity. That's going to be, for tax purposes in terms of that LLC. Okay, so first things first, if you want to use that solo 401k LLC process or structure, of course, you got to first open up a self-directed 401k. So it's got to be a solo 401k plan that's going to allow you to invest in alternative investments, in this case, an LLC. Then you're going to fund that solo 401k. So that's going to be different ways. You could roll over money from a pre-existing retirement account, like a former employer plan or a non-Roth IRA. You can make contributions from your self-employment income to that plan. And of course, part of funding the plan is going to be having an account. So you would have a bank account or a brokerage account set up in the name of the solo 401k. And that's where the money would be rolled into from, say, that pre-existing retirement account, or if you make a contribution, it would go into that bank or that brokerage account. The LLC is going to be a brand new LLC. So that means it needs to be registered with the state. So LLCs are filed with the Secretary of State. Typically, that's going to be in the state that in our experience, the state that the individual resides in, because the individual is going to act as the registered agent of the LLC. So they're not going to want to contend with having an LLC, and typically we will set it up wherever the individual wants, but typically we don't see them set it up in a different state because they would then have to get that LLC registered in that other state in terms of having a registered agent. But then if they're also going to be investing in their home state, now the LLC is going to have to be registered in 2 states. So the state where you're investing in plus the state that it's registered in. The next step is having that LLC operating agreement. And this is a very important step. So it can't just be an operating agreement that you might download from the internet or get from LegalZoom or something to that effect. Why is that? Because it needs to have important language regarding investing and the 401k regulations. Again, you are not going to be the owner of that LLC. Your business is not going to be the owner of the LLC. The owner is going to be your 401k. So it needs to have the customized language regarding investing and regarding the 401k regulations. An EIN, a separate tax ID number, is obtained for the LLC. So you might have a EIN for your business, you've got an EIN for the 401k plan. Now you have an EIN for the LLC, which is owned by your solo 401k. So that's something that we would help obtain as part of our services. The bank is going to require that in order to open up the LLC bank account, because you will have a separate bank account. You know, you might have a bank account for your solo 401k, and then you have a separate bank account for the LLC. So you're observing all those important requirements. You've got the operating agreement, you've got the EIN for the LLC, you've got a separate bank account for the LLC. So, and of course, the bank is going to require that EIN to open up the account. Of course, you're not going to want to open up the account under your business EIN or your 401k EIN, because that's not going to be correct or consistent with the structure. So now you're able to open up the LLC bank account. So the banker is going to need that EIN. They're going to need the articles of organization that were issued by the Secretary of State. And then you're going to fund that account with money coming from the solo 401k. So it's not going to be funded with personal funds. Why? Because you're not, even if you're eligible to say make a contribution, right, to your solo 401k, or you're able to roll over money from, say, that pre-existing IRA or former employer plan. That money would need to go into the 401k because it's a rollover or it's a contribution. This LLC is owned by your 401k. So the money then has to come from the 401k account. So that's another important reason why you need that separate account, to help document and demonstrate that this was set up correctly. So you could fund it by wire or by check, payable to the name of the LLC. So I'll stop. If anyone has any questions, please don't hesitate to jump in. So while you're formulating your questions, we'll keep going through this list. The next step is, and the next and final step here, is making the LLC investments. So remember, it's important to remember the structure. The LLC is owned by your 401k. So the money's now in that LLC account. So if you buy a property, for instance, we're talking about real estate investing here, the title is taken in the name of the LLC. It's not taken in the name of the plan. So that means you want to provide the title company with the EIN for the LLC for W-9 reporting. You know, if it's a rental property, your tenants are going to be making their rent checks payable to the LLC. And you know, in your own, as a natural person, you are the manager of that LLC. So it's a manager-managed LLC here. So you would sign on behalf of the LLC as the manager. So that's important to remember as you're going through the structure. Structure is important. Those formalities are important. So again, please don't hesitate to ask any questions in the live chat. Be happy to take them. So In terms of additional solo 401k LLC tidbits here, the additional solo 401k funds can later be invested in the LLC. You can have funds coming from multiple participants. It could be from both trustee participants. Like if you have, for example, a husband, wife who are both self-employed, let's say they're both realtors. So they both have one plan, but they both participate. So they've got different participant accounts for their solo 401k. They can both invest in the same LLC. And it's not a multi-member LLC because remember, the member is the plan and there's only one plan. So it's still a single member LLC. An LLC tax return is not going to apply. The IRS is going to view it as a disregarded entity because it's a single member LLC, even if both trustees invest their solo 401k funds. So you would want to account for that, of course, at the plan level. The fact that you might have, say, 60% of the money coming from the wife's account and 40% coming from the husband's account. Similarly, you could have both pre-tax and Roth funds invest in the same LLC. Again, it's just one member, it's one plan that owns the LLC. It's still a disregarded entity. But you could have money coming from different sub-accounts at the plan level, some from the pre-tax, some from the Roth. Now, of course, you're going to want to keep good records, as always, and account for that so that to the extent that you have any expenses or returns on the investment, that they're being properly allocated in accordance with those investment percentages. So if you have 60% coming from the pre-tax and 40% coming from the Roth, it's going to be important to continue to honor those percentages going forward. Now, down at the LLC level, all the income and expenses from that investment property are going to go in and out of that LLC bank account. So you got the tenant writing checks to the LLC, the money's coming in, your expenses related to the investment, let's say the property taxes are being paid out of that LLC bank account. And then finally here, and I'll ask before we go to the final point here, again, if anyone has any questions, please don't hesitate to ask in the live chat. And then just another reminder here, we're going to be having another webinar. As always, we do these weekly. Next week is going to be on tenancy in common, which is a very popular topic. So please look out for our communication. Please subscribe to get notifications of these webinars. If you can't join, they're always going to be posted live on YouTube, so you can come back later and watch it at your convenience. So as we were talking about before, it's important to recognize that the LLC is an investment of the plan. So it's owned by the plan. So let's say that just to paint kind of a real life scenario, let's say that you have a property that you've invested in through the LLC owned by your 401k, and you need you want to put more money in there to cover some expenses. And let's say that you're eligible to make contributions. You're not going to put those contributions directly into the LLC bank account. They need to go into the 401k account because that's a 401k contribution. And then the 401k, as we noted here on the first tidbit, can later invest additional funds in the LLC. Likewise with the rollover. If you want to put more money into that LLC, you can do that. If you need to put more money into the plan first, let's say you have another IRA out there, a non-Roth IRA that you want to roll over. Well, that IRA is going to be rolled into the plan, so it needs to first go into the 401k account before the money gets deposited into the LLC. So that's a common, question and, a concept that's sometimes hard to get your arms around, but it's important. And so I'm glad we took time to go through that. So that takes us to the end of this presentation. I certainly appreciate everyone joining. Please like this video and subscribe for more videos like this. Thank you so much.